My second biggest position in my portfolio, SoFi, just reported earnings recently, just a couple of days ago. We're going to talk all about those earnings. It was another beat and raise quarter from SoFi, one of an extremely long string now. It's a great feeling to know as a SoFi shareholder that each and every quarter, they are extremely likely to beat analyst estimates on revenue, on EPS, and raise guidance. SoFi has been one of the hottest stocks in the market over the past few months. Since the April lows in 2025, the stock is up over 200% as of recording this video. And just 2 days ago, we got the Q3 2025 numbers from SoFi, and the price action was not atypical for SoFi. This is not unusual price action for SoFi. Check it out. Before they reported, the stock was at $30.90. Right at the open, the stock dropped to $29.11, and then throughout the day, climbed all the way up to $31.76 before over the next few days falling to basically be where it was when the stock dropped after earnings. So this is not an unusual move for SoFi. This price action does not mean that SoFi had a bad quarter whatsoever at all. There are a couple things in here that we're going to talk about that need improvement, but this was an amazing quarter. I'm going to dive into it. We're going to get into the headline numbers. Then we'll talk specifically about the 3 different business segments: financial services, lending, and tech platform. Then we'll talk about the guidance that they issued and my plan with SoFi. I'm excited to jump into this video, but real quick, if you're not subscribed already, go ahead and do that. I appreciate you doing that in a major way. Let's jump into the video. So SoFi reports third quarter 2025 results with record net revenue of $962 million. That is an insane beat from what was expected. The range that was expected was about $895 to $904 million. They smashed that all the way up to $962 million. Very soon, maybe even in Q4, they're going to be clocking over $1 billion in revenue each and every quarter. They also had record member and product growth and net income of a very impressive $193 million. That absolutely crushed estimates as well, and that equates to 11 cents of EPS, which surpassed the estimate of roughly 8.5 cents per share. Very respectable beat on EPS, crazy beat on revenue, and they raised guidance. We'll get into the specific guidance numbers later in the video. Revenue was up 38% year over year. Adjusted EBITDA was up 49% year over year. Fee-based revenue was up 50% year over year. Member growth was up 35% year over year. Product growth was up 36% year over year. In the CEO, Anthony Noto's statement on the quarter, he said, "We achieved record adjusted net revenue of $950 million and added a record 905,000 new members and 1.4 million new products. Our ability to consistently deliver durable growth, strong returns, and exceptional credit performance proves that our strategy is battle-tested and built to outperform." That is absolutely what they've been doing recently, outperforming. Love that. The opportunity before us is massive, and SoFi is executing from a position of unparalleled strength. That's why we're investing aggressively across the business and accelerating innovation in crypto, blockchain, and AI to help more members than ever before get their money right. Love to hear it. Let's go into the consolidated results. We had revenue up 38% like we saw. Net income year over year was up a ridiculous 129%. That is amazing. That led EPS to be up 120% year over year, and those are all GAAP numbers, by the way. All right, now we're going to get a little more detailed into the 3 different business segments: the financial services segment, the lending segment, and the tech platform segment. One was amazing, one was pretty dang good, and then one was pretty ugly, okay? So we're going to start with the financial services segment first. And once again, multiple quarters in a row now, like 4, 5, 6, I can't even remember at this point, so many extremely strong quarters from the financial services segment, mostly driven by the loan platform business going crazy. Let's check it out. For the third quarter of 2025, financial services segment was up to $419.6 million. That was a 76% increase year over year. That is getting really close to being their largest business segment now. Lending for the longest time was their largest business segment. This is getting close to it. Lending is still the #1 business segment in terms of revenue, but financial services is catching it really fast. And it's not surprising. If you're growing at 76%, you're going to catch any type of business segment really quickly if you've got revenue growth like that. Net interest income for this segment was up 32% year over year. That's a very impressive number. But then look at this, the non-interest income, that capital light fee-based revenue they've been focusing on for about a year and a half now, was up 157% year over year from $84 million in the prior year period to $216 million in the quarter they just reported. That is absolutely nuts. And then that means total financial services revenue, like we just saw, was up 76%. Directly attributable expenses to the financial services segment grew way less than the revenue grew. Revenue grew 76%. Directly attributable expenses only grew 39%, which you know what that means? Contribution profit is going to explode and the margin is going to explode. So contribution profit absolutely exploded, 126% up year over year. And then the contribution margin, when you compare to Q3 of 2024 to now, it is up 12 percentage points. Not 12 basis points, 12 whole percentage points, from a 42% margin all the way up to a 54% margin for the financial services segment. That is absolutely insane margin expansion in a 1-year span. Total financial services products were up 37% year over year, with 34% in money, 27% in invest products, 48% in their credit card product, 85% increase in referred loans, 44% in SoFi Relay, and 37% in SoFi at Work. This was another perfect quarter from the financial services segment. Let's move on to the second segment, which is lending. The lending segment had a very strong quarter in some aspects, and there's some areas to improve upon as well. Let's check it out. For the third quarter, lending segment had revenue of $493.4 million, which is a 25% increase from the prior year period, with net interest income leading the way, up 35% year over year from $316 million up to $428 million. Directly attributable expenses rose way faster than revenue did for the segment, up 44% when you compare it to the year ago period, all the way up to $219.8 million, up from $152.9 million in the prior year period. On an absolute basis, contribution profit was still up, and it was up decently, up 9%. That's way less than revenue was for the segment, but still up. We love to see that. But since those expenses were up so much in comparison to revenue, that means margins are going to get hit, and they got hit in a major way year over year. In the year ago period, they had a 60% margin for the lending segment. In this year, Q3 2025, they had a 53% margin. That is a 7% decrease year over year. That is not good. Got to get those directly attributable expenses under control for the lending segment so that we can see margin expansion, okay? The market is seeming to brush off this margin contraction in the lending segment because of the insane margin expansion in the financial services segment. If margin expansion in the financial services segment starts to slow, but we still have this margin hit in lending, it's going to turn sour for SoFi, and investors are not going to be happy, and we're not going to see people flocking to buy the stock like we have for the past few years. They're in the clear for now, in my opinion, but if they don't get those expenses under control for the lending segment, this could definitely start to weigh on the stock over time. All of that said, there was one extremely bright spot for the lending segment, and that is with their origination volumes. Origination volumes total for the lending segment were up 57% year over year in Q3. That is nutty. For personal loans, it was up 53% year over year. For student loans, up 58% year over year. That is a surprisingly high number to me. And then home loans up 93% year over year in terms of origination volumes. Those are all very impressive numbers, and that's going to mean great things for that net interest income moving forward through Q4 and beyond. Okay, now let's get to the third and final segment. This is the technology platform segment. This segment absolutely had the worst quarter of the three, and it's not even close. Let's check it out, okay? Technology platform segment revenue was $114.6 million for the third quarter, which was an increase of 12% year over year. That is not a bad growth number, but we would like to see a much higher growth number, okay? 12% is not trash, especially if they're able to keep expenses under control, but they're not able to keep expenses under control for the segment right now. And this has been a trend over the past few quarters, all right? So 12% revenue growth, but directly attributable expenses were up 18%. That is 50% higher than their revenue growth, okay? That is not good to see. And once again, that means contribution profit and contribution margin are going to drop. Profit actually decreased year over year from 32.955 million to 32.372 million. That is a decrease of 2% year over year in terms of absolute profit from the segment. Margin also dropped, of course, from 32% in the year ago period down to a 28% margin in the quarter they just reported. They have got to keep trying new things with the technology platform. It doesn't seem like they're signing these huge clients like they were going for. It doesn't seem like anything's really paying off for them. They just keep on spending money, and they keep on spending more money than they're bringing in terms of revenue as a percentage, okay? Not ideal. We've got to turn this around for the technology platform. The good thing is this is the smallest business segment by a mile, and the other two segments have some really, really great things going about them. Financial services is basically perfect right now. Lending, yes, the expenses are too high, but pretty much everything else is very, very solid for lending. So this segment being weak would not lead to people selling this stock off in mass. A lot of people who buy stocks, unfortunately, don't even look at the financials, okay? They don't even look at the different business segments for a company. So people might not even know that the tech platform is having a rough time. And just to illustrate the weakness of the tech platform a little bit more, technology platform connected accounts dropped sequentially and dropped year over year down to 158 million for Q3 of 2025, which is down from 160 million in Q3 of 2024. Once again, I feel like I've said this for many quarters in a row. I look forward to them turning around the tech platform. I really do believe that the tech platform could be an extremely strong growth engine for them if it is run the right way, okay? I don't think it's being run the right way. I don't know the exact inner workings of what they're doing and what they're trying with the tech platform, but I do want to see them turn it around, okay? The other two segments are strong enough that it's really not a major deal, but me as a long-term investor, that's what I personally want to see. Okay, now let's get into guidance. SoFi raised guidance once again for full year 2025. I'm going to go through the entire guidance raise. We're going to talk about it for full year 2025. Management now expects to add at least 3.5 million new members, which represents approximately 34% growth from 2024 levels. Management expects to deliver adjusted net revenue of approximately 3.54 billion, which is $167 million higher than the prior guidance of 3.375 billion. This implies approximately 36% annual growth versus 30% in their prior guidance. I believe they expect an extremely strong Q4, okay? Management expects adjusted EBITDA of approximately 1.035 billion, above the prior guidance of 960 million. This represents an adjusted EBITDA margin of 29%. SoFi expects adjusted net income of approximately 455 million, way above the prior guidance of 370 million. I love to see that. And lastly, SoFi expects adjusted EPS of 37 cents a share, which is once again way above the prior guidance of 31 cents a share. And this last sentence might be the craziest, actually. Management expects growth in tangible book value of approximately 2.5 billion for the year, above their prior guidance of 640 million. That is a crazy beat. So overall, when you take the 10,000 foot view, this is a crazy quarter for SoFi. When you just look at the financial services segment, this is a perfect quarter for SoFi. When you get really nitty gritty detailed and you get really granular, you'll see a couple of things that could use improvement, but that's just me being picky. If we're being honest, this was a crazy good quarter for SoFi. Another beat and raise quarter, one of the best I can remember in recent memory. All right, what is my plan with SoFi? Am I buying, selling, holding? What am I doing? This is my second biggest position in my entire portfolio. It is way overweight, to be totally honest. Got a cat in my lap here. It is way overweight, to be totally honest. I'm probably not going to be buying more. I did actually consider, I hold almost all my shares in one account, in one taxable account for SoFi. I have other smaller positions. I did consider just buying more shares. Each quarter I see, I'm just like, man, I just got to hold more SoFi shares. I haven't pulled the trigger on that yet. It's definitely above the price where I bought the high bulk of my shares at. I'm up well over, let me think, it's over 300%. So whatever that is, 4x, right? That is a very, very solid gain on those shares, okay? But the thought did cross my mind that I might buy more shares of SoFi in maybe some other separate accounts that don't have as big of positions, just because it's such a great stock and what a great management team that's running this company, okay? I haven't made any moves yet with SoFi. I'm definitely not selling, that's for sure. But if I do buy any more shares, the first place you'll hear about it is on my Patreon. If you want to be a part of the Patreon, I'll have it as the first link in the description and as the pinned comment down there, okay? Let me know in the comments comments below what you think about this quarter and what you're doing with SoFi stock. Are you buying? Are you selling? Or are you just holding and riding this roller coaster? And I can't wait for index inclusion, specifically S&P 500 inclusion, that is probably coming within the next few quarters. That is my guess. I have no insider information on that. That is just my personal guess. All right, I look forward to seeing your comments down there. I appreciate you being here in a major way. Thank you so much. Have a great night.